All right, we're back. Power's back on. The timing on that was pretty funny. All right. Looks like the market kept melting down. If I can get this going again. Okay. So BBY bounced right on that level that I had drawn at 37.20. SPY, I didn't have any levels down here. Oh, it broke through at 39 though. Bouncing on that one down there. But put a line there. Put one here. Hey, buddy. Big 4-hour candle. Yep. Certainly is. What a meltdown, though, huh? So BBY, I had the cover call. I had an order just to close it out, back out at break even, and then the power went out. So I didn't want to try and manage it, so I just left it alone. But if I was back here, I would have probably kept it open, closed it once we saw this bounce. But oh well. Oh well. It still looks really good, honestly. Only 4% down. Nice consolidation day. So I still could think a move would happen end of day or even after hours or pre-market. I think they have until pre-market tomorrow. The thing is though, is they could do the whole move in the after hours, and if the market's tanking, then when the market opens, it just sells off. You get one of those huge red candles from a gap up. See what my so what my puts did. What? My GME puts are only up 1%? Jeez. It sounds like Genesis is going bankrupt too. Whoops. It's crazy, man. EVTL's up 5%. Thanks, Don. What's the borrow rate on EVTL right now? Let's check it out. GameStop's still at 22%. I don't want to get like balls or something on BBY. Maybe some spreads. EVTL borrow fee has just been declining, unfortunately, and more shares available. That's weird. Seems like it was heavily shorted and then didn't really even get a price action, but such a strange chart. Look, so super high borrow fee, basically no shares, and then the borrow fee somehow is just dwindling and shares are becoming available. But look, the price has just come down in that time. That doesn't make sense. So maybe it's setting up for something, I don't know. I suppose there's many tools in their toolbox of crime. Right, Netflix earnings after hours, huh? Yeah, Don, what the heck, man? I'm up 1% on them. It's come down 3.8%. Blasphemy. This means I'm gonna have to buy more. Pretty big daily red candle there. Yep. Of course it would be when I didn't have enough margin for a big ES. Get exposure and it's a couple small ones. Oh well. Okay. Still opening stuff back up. Let's see, so I've got 4, I think, of these small ones. Holy crap. They're up quite a bit. Just 4 is up $1,000 from that move. That's crazy. That's half. That's half what. That's less than half what one big one would have been. Bummer, man. One big one would have been up 2 Gs. I'm gonna hold it though. I don't know. I'm not trying to scalp this. I think this could be the top. Coming into OPEX. SLD is historically bearish. I'll ride through it. It'll probably lose some value, but oh well. I think it'll do well the next. Who knows? Who knows how long? I've got until I think February on it. Or no, I have until March, and then even at that point, I could just cash settle. So if I shorted it here, say at 400, and March when it expires, buys at 350 or 250, I will just make the difference. Let it expire. Not trading in force. Nope. You're looking for volume more than borrow fee on EBTL? Thanks, Fully. BBY looks good. I haven't been watching the last couple hours, and I figured it would be more of a dump, honestly. It bounced right on that level we had, that 37.20, which makes sense, I guess. It's been holding up better than the market the whole time. It's been coming down, so. Don't share stuff in general. Don't share media in general. We have a media channel. Like the teacher's away. Kids just go crazy with gifs. NRGB held up noise. See if SPY makes it all the way back up to VWAP. Got some climbing to do. How about volume? 7-day ban. I like that. You're looking for 1 to 2 million volume on a day. I mean, we had that. It was just red. 1.8. There you go. Beginning of a trend. Yeah. Yeah, it's a pretty good indicator. Unless you get one of these 1-day spikes, that would kind of suck. 9 million. That was a fake out. That one had a little rally, but yikes. I think the BBBY is still on for this week. I put that message out, like, it seems like it could be shutting down for the week, but yeah, I think end of day, after hours, we could still see action. And it holding that high of a support is Looks good. Setting up a nice bull flag. What's going on with Rocket? Similar chart to lots. Our birds die. Oh, birds fully died. Come on. Had some stuff to say with BTC. Yeah. Yeah, I heard crypto was taking a dive. Rolled out your long calls? I'd probably just play the shares on EVTL. Might add to those shorts if we move up to that VWAP. I feel like it could be the start of a trend to new lows. Definitely looking like that. 80 strikes in BBY. Well, you can tell by the delta on them. Easy way to tell. Those are what, February's? I don't even know where the 80 strikes are. Next January? March? These? Oh, I'm not showing all anymore. Whoops. Feb? No. It is January. Okay. What? I don't know what you're talking about. Hmm. What a smooth chart, man. I believe shares if I could by right. Oh, it's kind of like an arbitrage play on the options chain. I like what I'm doing on birds, but probably better. Yeah, what the heck? I'm down on those puts. Okay. Too bad the power went out. That would have been nice to farm some theta on that drop. That was the... Oh, my cash secured puts closed also. Nice. Not on GME yet. I have to lower my strike. Or raise it, rather. Okay. So I've got cash back in that account. I think I'll wait before I do any more short puts on GME. Flip bearish on the hourly. Be pretty nice if it bounced off this previous support, that 1944. Might open some close to the monies once we get there. Oh, I wanted to look at BBBY. Birds. Beigebook? Is that Facebook? Is that Meta? I don't know what Beigebook is. See. So I closed the weekly 4.5s. Oh, actually I can see it right here. Oh. The theta really got sucked out of those. This consolidation is just killing the IV. You guys holding long calls are yikes. So dang it. That would have been $500. Some power. I'm gonna build my power company. Yeah, here it is right here. So I closed out the covered calls for 40 cents, which is what I opened them for. Oh, you can't really see that there. Oh, there. I closed it out for what the heck, 40? There, 40 cents. And then right now they're worth 22 cents. Blah. And there was like $900 in premium, so that would have been basically $400 or $500. I just didn't want to mess with it on my phone and try and watch it. Better to be safe than sorry. Like how well NRGV's holding up. A lot of volume. 19 mil. Look at this thing holding up. Carvana's holding up nice. I should roll that 8 strike covered call up. Spy's coming back down. Not much of a bounce. That's a nice little bull flag. I could just close my covered call. Up 75% on it. That is neat. Yeah, that was 109 in premium. Put an order for 10 cents to close it. Maybe that'll fill tomorrow. Wish there was better options on NRGV. Got a little volume in there today. It's a huge spread. $4.5, is that my cost basis? Oh, 4.7. That gas selling off. Kind of breaking the support it's made since the beginning of the month. Man, it's getting cheap. Everyone's aware of the economic conditions already? What you talking about, Willis? Might get some more GME puts. Average down on them. Oh, they're up 2% with this little drop. GME made it to VWAP. All right, I put an order to buy. Oh, wow. I put it at the bid and it filled almost immediate. Interesting. That's weird. It's SLD, that's right. Oh, Beige economic condition report. Oh, it just got released, I guess, huh? The Beige book. Unchanged since last report. What puts did you get on GME, Donro? Oh, did you put them in trades? No, you didn't. You're too scared, aren't you? I don't know how long I'll hold these. Maybe till Monday, but I might close them out on Friday. Depends on how far we come down, I guess. A bounce on that 1940 I think would be pretty bullish if we hold that support. I guess even coming back down and retesting, then it would just look like the normal old double bottom that we've seen so often. Almost like this one. It's a long amount of time though. I'm hoping we don't have that long until a rally. Maybe like that one. Looks more like this though with that move up we've had. I don't know, it's all different. It's all different now. I don't know how to read it. It seems like SLD is still, well, I guess it could be the market, but it seems like that's still a variable. It's selling off into SLD and maybe the market in general. That hasn't changed. Got 21. What I never post in, don't do that. Don't post in general, not trades. We want to see it. I don't want it clogging up general. What's the strike, or what's the date? Man, SPY's weak today. That bounce was nothing. Right into a red engulfing. Yikes. Oh, you're just scalping them. I see. Okay, well then those, yeah, I guess doesn't really matter if you're just scalping. Yeah. I don't really put my futures trades in there anymore either, because I've just been scalping them, but those ones that open today, I don't think I'm gonna scalp. I'm gonna try and trade those on the longer time frame. Yeah, they don't change value. I know that's crazy for weeklies. Because I got February. Mine just went back green with that red candle, and I averaged into them. Now that I basically break even. Oh, I got the end of January, so I don't have much. I just have till next Friday. I didn't get much time either, actually. Might set a order to sell. Let's see here. Price would I be happy with? I have a little more of them than I want for that short of time. But the IV is not crazy high, so it's not great. My break even's 1905 on a 20 strike. That's it. SPY's coming back down. Yeah, I might get rid of these this week, or maybe Monday. But I think Tuesday. If we don't get a move this week, I think maybe Tuesday we'll start to see it. A post OPEX move. And BBBY might be waiting for that also. It'd be too bad though with the options chain right now for this week is just crazy. Yeah, we dropped out of that 4 strike. Weird, my puts got filled uh at the bid. Or sorry, at the ask. No, at the bid. Like immediately. It's really weird. And there wasn't like on a candle or something. Here we come back down again. Do I have any levels below that? No. Probably time. Might have a bit of a vacuum down to that gap fill. Maybe like this level. And that's probably going to be a level right there. See how those line up with up here. That's the beginning of that gap fill, and that's yeah, support that day. resistance this day. All right. See how it plays. Already down over 1%. Another SPAC. Ways going public. Oh, never mind. Worldview going public via SPAC. Haven't they seen the charts? Don't do it. Don't do it. SPY kind of bouncing off that 393.37 we have drawn there. Little inverse head and shoulders, potentially. Eh.
around the markets and some stocks to watch. Tony Zebigel is with us, Chief Operations Officer, Senior Wealth Advisor, Strategic Wealth Partners. Tony, great to see you. So what are we in this wait and see? You said we're in this complacent. What is the market waiting for?
Great question. You hit the nail on the head. You know, the market does seem very complacent right now. And I could really see some near-term volatility spike up. I think you mentioned in the segment before that the VIX is around 20. That's typically a good time to buy the VIX, and with the VIX comes volatility and a sell-off. So technicals right now, they're hitting resistance around 4,000 on the S&P 500. Earnings season is just getting started, and it's already starting to underwhelm. For example, financials, they were revised down 2% over the last 2 weeks. And it's hard for me to find any kind of catalyst this earnings season to drive the market higher. The market, I feel, really hasn't discounted a recession at this point, yet you have all the big players over in Davos, around 70% plus, saying that there's going to be a global slowdown or recession. Jobs are still plentiful, and I'm sure that's what the Fed is really holding on to. But we kind of believe that, you know, these are companies that are still working through their COVID backlog. And when that backlog is done, what do we do with all these workers? Do we have enough work to keep them employed? So that's why in 2023, I feel that active portfolio management is going to be more important than ever, because we're seeing a lot of economic data get worse, and the market rallies for some reason. So is the market going to really rally on bad corporation news if it were to happen? I guess we'll find out in the next quarter or two. So that's why we're not really chasing any stocks here at, you know, the S&P being around 4,000. It's just too difficult to find quality companies. We're going to wait to see if there's a pullback. Hopefully somewhere, you know, maybe we see somewhere around 3,600, and we'll be buyers again. And our buy list is pretty straightforward. It's high quality stocks, strong balance sheets, and strong cash flow.
Okay. So at this point, you know, we're in this wait and see. The only area that's really seeing that weakness is tech. We were just talking about all those tech layoffs. You know, more than 150,000 last year. I saw one print that said 250,000, but I'll use this one because I just saw this in a report. 154,000 last year, already 25,000 this year. Do you stay away from tech?
I think a lot of air has been let out of tech, maybe minus Apple, but the rest of the big players have been, you know, the air has come out of that balloon. I think being a buyer in tech right now would probably be a good opportunity. And then you're going to see, unfortunately, a lot of, you know, you see a lot of upticks in companies that say they are laying off. They're going to be more worried about the bottom line. They're trying to streamline their operations and their cash flow and their revenue. So, you know, unfortunately, laying off jobs is good for stocks. So I would be a buyer in big tech right now.
Okay, understood. So, I mean, I know you have some picks here. A moment to think about the tech story a little bit, but Aspen Aerogels and Estee Lauder. Tell me a little bit about those two names.
Yeah, so Aspen Aerogels, I think this is a great long-term story. They're a small cap company, because when the narrative changes from gas-powered cars to EVs, Aspen Aerogels, they're going to pick up market share with their one product. It's called Pyrothin, and this product insulates the battery and prevents fires. Now, earlier this year, they got hammered right out of the gate because Tesla missed their numbers. The funny part is that Tesla's not even a customer. So they're getting wrapped up into things that are happening with Tesla when some of their biggest customers are GM and Toyota. Now it's rumored that Tesla and BMW could become customers later this year. And they also felt a little bit of pressure last year. They're trying to raise capital to grow. They found that capital. They're going to be building a second factory. So I think a lot of the, you know, some of the heat
NRGB had to move back up to VWAP.
And I don't think you should get wrapped up on bad earnings or a bad headline from Tesla to beat up this stock. So it is at where it is, where it started this the January 1st, and I think it's a good buying opportunity.
Yeah, understood. Estee Lauder, when we think about what people want, makeup somehow, first of all, it has great margins. A lot of these creams and products, it's pretty good kind of company to go for in the first place, right?
Whose stocks are holding up well. These ones have been
I mean,
squeezy.
they're just a large, established global brand. And I like them actually in the short term because they are such a big company. Are we going to see 10, 20, 30% growth? Probably not, but maybe in the short term we see a good pop because it's a great company to own for the China reopening trade. And plus they have a great long-term growth story supported by the growing Chinese middle class. So there's a lot of things to like, and it kind of fits that narrative that I talked about where we have a high quality company, strong balance sheet, and strong cash flow.
Yeah, understood. And you did say there were some opportunities in tech. What are we talking? I mean, are you talking the Apple, Microsoft, Google, or is it something else? Is it AI? Is it, I don't know what. You tell me.
You know what, I do like AI because as employers start to look for employees and they can't find them, they're going to have to start looking for technology. And AI to cover, you know, the cost of hiring an employee and keeping that person on benefits can maybe, unfortunately, be something that the future holds for us. So having AI, having smart technology that helps run, you know, warehouses and computer factories and things like that could be a good company. And there's a company I can think of, a very, very small company, but Berkshire Grey, one of their biggest companies that they, one of their biggest customers is FedEx, and helps automate a lot of their systems so that we can get our packages faster.
Right, understood. And what's your big takeaway for this year when people say, hey, Tony, what about the market this year?
Tony,
I mean, what should we walk away with here?
Well, you know, I talked a lot about how, you know, there's a lot of, like, I had a lot of bearish sentiments. Well, you know, if we start looking at some of the bullish sentiment, we could take a look that the Fed orchestrates a soft landing. There's still enough time for them to do that. Employers are actually holding on to employees because of talent scarcity. And there's a statistic out there that through the course of the history of the, you know, the stock market, there's only 10% of the time have there been 2 consecutive negative years. So we got a 90% chance that we're going to make money this year. But that does not mean that we can't pull back in the near term. If we pull back 10%, that doesn't mean that we can't finish the year 15 or 20% from the bottom. And also one other thing is that PPI came out, the Producer Price Index came out today, and it's starting to become a lot in line with CPI. So this helps us know that inflation is stabilizing, and I'm sure that's something that the Fed is watching.
Right. Tony, it's good to see you. Tony Zavala, Strategic Wealth Partners. Thank you so much.
Time to get back on the lobster boat, Tony.
Stratospheric balloon company Worldview announced an upcoming SPAC merger. The president and CEO joins us next to talk about going public in the current environment and how space tourism could benefit his company.
Yeah, going public right now, and then also via SPAC. Whew. Cojones. This line. RGB. See if I can sell calls on this thing. the spread on this option chain kind of sucks. I have to stick to monthlies. I'll try and sell some. Maybe I'll wait. Just this is moving on good earnings. Good to keep having a continuation. Borrow fee is low. Tons of shares. Doesn't look very shorted. I don't know.
And we wanted to find the right SPAC partner. The Leo Holdings team has a great track record in the SPACs that they've done, value added in terms of the management team that they bring to the table. So we're excited about it.
Yikes.
And the deal's expected to close in this first half of the year, right? In the second quarter, most likely. Is that still probably on target?
Yes, ma'am. That's our focus. And in the meantime, we're going to be operating the company, growing the company. You asked about what you can expect from us this year. Each quarter, we expect to see growing revenues from before. We'll do a little more than 15 million in revenues this year. We're going to do more than 15 flights this year. So it's going to be fun to be able to share this kind of company with
That's crazy.
With investors.
Yeah, I'm curious how these flights are actually happening. I see some video there. It's not a rocket. What are we looking at?
Yeah, so this is stratospheric ballooning. So it's a very friendly way to access the stratosphere. When we think about the impact on the atmosphere, it's virtually zero impact. We're using helium or hydrogen for our flights. And what we do is we access the stratosphere with this balloon, and we're able to stay in the stratosphere for
this freaking guy taking all our helium.
days. And in doing so, we're able to produce very high quality imagery. And when we apply analytics to that imagery, we're able to use the technology for a lot of different use cases.
Yeah, I saw space tourism, but the imaging is such a key part, and that comes from the love of the
does look
Earth,
like a capital
right?
suck.
That's exactly right. So when we talk about
maybe
why we
when they
exist
go
as a business,
public, maybe
it is that
SPACs
we
won't
exist
be
to
cursed
inspire, create,
anymore.
and
But
explore new perspectives for a radically improved future. When we think about how we apply that to remote sensing, it's all about using the system to collect data that can contribute to an improved future for our customers. So one example is work we're doing in methane gas detection, where we can detect methane over infrastructure, alert the operator of a pipeline to that methane leak so that they can do something about it. And that's obviously a contributor to a radically improved future. And when we think about it from space tourism, it's all about putting people in an environment where they can view our Earth from a new perspective. And if we can deliver that to as many people as possible, we expect to see people having, a newfound respect for our planet. And so on both sides of our business, remote sensing and space tourism, it's for the love of the Earth. It's for having a positive impact.
Hardly space tourism, it's just images.
Yeah. What kind of competition is there? Have you been approached by any big companies who want to work closely with you? Because this concept seems something new. I certainly haven't heard a lot about this kind of ballooning stratospheric flight. Nor have I heard
They've
someone
been doing that since like the 1500s.
skydiving, free falling
Was it
from more
1500s?
than 100,000 feet. I mean,
people
was
in
that
them?
right?
Yeah, 136,790 feet. It's the world record. When we think about our company, we view ourselves as augmenting other types of solutions. So when we think about low Earth orbit satellites and the kind of data that they're able to collect, our solution is augmentary to what they're doing. So we can contribute to a better understanding of what's going on Earth. And from a space tourism perspective, this is an entirely different type of solution. You're talking 6 to 8 hours of being able to experience viewing our Earth and in a much more environmentally conscious way and a much safer way, and that's something that we'll work on in the future. Right now, we're focused on a remote sensing business. We're really wanting to make sure that we're a strong, healthy, growing business.
Looks like Spy wants to
and then we'll turn our attention
new high
to
off
bringing
of
our
this
space
resistance
tourism
here.
business to life.
I see. And
Pumping
so
BBBY
when we
also.
look at this company, you didn't mention, do you feel like anybody does anything similar to what you're doing? Because I'm thinking that you could be a great takeover target or mergers and acquisitions in the next 5 or 10 years.
Well, for sure. No, there's not another company like ours, one that has a very strong and growing remote sensing business, plus a space tourism business that'll be coming online in the future. So we're very unique in that way. I think we're one of a kind.
I see. Ryan, great to chat with you. Thank you
Did
so
you see
much.
that?
It was a pleasure.
That movie?
Helicopter
It
skiing.
was crazy.
This is a whole new realm.
It was
Ryan
a true
Hart,
story,
thank
but
you.
they
President
swapped
and CEO of
the truth from
Worldview.
it being a guy to a girl, because
Coming up,
PC.
BPAC's David Dean.
It's actually a really good,
has his
really cool
market
movie.
outlook and some stock picks to put on your
Joined
radar.
them when
And
they
we're
broke the
joined by
record
co-founder
for the
of
highest
Wave,
flight. I
has
think it was
a new
like
book.
1500s, I think. Maybe even earlier than that. It was insane. No human ever met Earth or wit. And the Earth is also flat. You're just talking about with Elon Musk, a human hasn't been out of Earth's orbit. Let's see, wasn't that on a SpaceX rocket that they went to the space station? I think so. Still in the orbit, I guess, but too much competition in space tourism. I don't know if when he said tourism, or she said it, I didn't hear him talk about actually putting people on those balloons. I think they're just talking about like virtual tourism. Like pictures, touring a place with images and video. I don't think he was actually talking about people. I don't know, maybe that's their plan in the future. That'd take a long time. And you'd be freaking freezing. Vanny looks nice, man. Same chart as a lot of them. I don't even know how this ended up on my watch list. Oh yeah, easy go. Totally missed this huge move. Oh, it broke out today. Seems like Tesla might be a nice trade up to this 166. However, the market does seem like it's hit a top. I don't know. Tesla can kind of move on its own at times, to the downside or the upside. What else? Volume. That's crazy. that signifies a support. Much of volume picking up. Garbage disposal for cash. I saw that, Ace. It's Discord gets freaking vicious when I'm not around. I'm about to start kicking some people out. Satellite image analyze developments over time and estimate the real estate price evolutions. Weird. That seems pretty elaborate, Ace, to prove that you're Mexican. We got Atlantic conspiracies in the chat. Yeah, maybe the analytics part. That's interesting. Yeah, if you mail me fresh Mexican tacos, burrito, and Jalisco, I'll believe it. And I'll kick anyone that says otherwise. Ban them. At least a 10-minute ban. Oh yeah, NRGV. Let me, well, I wasn't gonna do it actually. I mean, it's up 40% today, but this is actually the only thing that has a catalyst. It has a nice chart like the other ones, and this one has a big catalyst, so this thing could keep going for a bit. I'll leave it. SPY kind of rejecting that resistance. This is why I'm happy I didn't try and just close out here, like, because whenever you enter, I'd want to stay in the trade. So, trying to time the market as little as possible. Sweetbread? Is that a Mexican thing, sweetbread? Yeah, back over 4, back to view up would be nice. 424. With how the market's pulling it down today, it could be one of those fulfilling obligations, like end of day or even after hours. Maybe some moves. Or pre-market, I guess.
We're saying they have to get over 5%. That's a little awkward when you see the weakness just recently reported in the CPI and the PPI, and a big reduction in retail sales. That causes some consternation. He's just one person. He's got to get together with the group. So I think on the one hand, they're going to say, we're successful. We want to bring down inflation. It's coming down. They're also going to say, are we sure we're done? No one ever knows exactly when you're done because it's monetary policy acts with a lag. But I think they're going to send stronger message that people are thinking today that perhaps the end is closer than we think. And of course, they also realize, hey, we've got a tough job. It's just as foggy for the Fed as it is for the rest of us. From an investor's point of view, I think you're still want to be looking for good stocks, reasonable valuations, good dividends, and buy them on days like today.
Right, understood. I mean, Loretta Mester tried to make sure that people wouldn't think that the Fed might be thinking about pausing. I mean, she came out and said, even though the hikes are cooling inflation, that more hikes are still needed. And so they will have to continue to do these hikes in order to tame inflation.
Well, they may be right, but the problem is no one really knows for sure because that monetary policy actually the lag. But if I think that if you asked them, let's say 4 months ago, would these numbers be a good, strong signal that they're on track with their inflation-fighting mission? I think they would say absolutely. So I think the big quarrel that the Federal Reserve has with the market is what's going to happen in the second half. The market is saying not only are they going to pause, but they're likely to cut. And of course, the dot plot, which is issued before these latest PPI figures, say absolutely not. rates stay very high throughout the rest of 2023. I think at the end of the day, who's right, the market or the Fed? History shows you that ultimately the market is right, and that's what that 10-year down to below 3.4% is telling you, that inflation is getting squeezed out of the system.
Right, understood. Let's get to some of your names here. You have Ford, Glaxo,
Everyone's bullish.
Kroger, and AT&T.
Good time
to
to buy puts.
Yeah, absolutely. So, Ford, of course, with GM as the two top domestic makers. Here's what I like about Ford. First of all, they have a strong EV unit. And what I especially like is the fact that although they're still under the same corporate umbrella, they've split into separate divisions. What does that mean? From my point of view, at a certain point, you could see Ford split into two companies. I don't like to say bad Ford and good Ford, but certainly legacy, internal combustion, and new EV. If they were to do that, I think some of the parts would be much higher because people would flock and drive up that EV valuation.
Yeah, they need to.
Second, of course, is that they have been tarred with a lot of Tesla's troubles and so forth, where Tesla's still growing very strongly, but not quite as good as had been predicted, some troubles in China. But the fact of the matter is, Ford shouldn't come down as much.
Yeah, BBY looks good. Holding up very nice. Yeah, I mean, I'm glad I closed my covered calls. I just wish my power didn't go out so I could close them later. Getting a little pop there even. 241 might be our end of day rally beginning. Yeah, it's leaving the SPY behind. Yeah, it's moving up. This is what we want to see. Moving without the SPY. The SPY just kind of settle down though. You get this amount of pressure on the market. Velocity. Gonna come with it. Discontinue the town car. Oh yeah, did they ever come out with that? The last one that was supposed to be like suicide doors. I remember seeing a concept of it. I don't know if I ever saw one in real life. Wasn't that the town car? No, that was a Continental. Never mind. Come on, wake up. More volume, more up. Vani. These options got any cheaper? Tiny bit. Holding forward would be good for Friday. Really breaking 5 would be. That's a lot. That's 58,000. Oh, he actually did tweet. Okay, let's see it. Why did it come up on our Twitter? The heck? He retweeted that. This is from Superstonk, this tweet. I think, well, I saw that on Superstonk. I don't know I'm assuming someone made that on Superstock. That's awesome. That's awesome. Is that what that little BBBY pop was from? GME. Algos still have a little something something programmed in there for those RC tweets, especially with pictures. Pretty funny. BBBY moving up to VWAP, starting its climb back to 5. There's 4. Get rid of this now. Oh, glad I'm out of those cover calls though. GME getting some love. Super low volume melt up. MC also kind of all moving. Just stop. $1 at a time. What's your what are you holding on BBY? Zeps? What's your position? $2,400 shares. Nice. That's exactly what I have. Are you trolling me? Are you trolling with me, man? You trolling with me? I had, let's see, I had 5,900 on my other account, but I actually closed it out on Thursday. So I still got a good exit on that, but the way it's holding up, I think it's going to keep going. So probably could have held it. But I'm happy to be out of that much exposure at least. $10 to power hour. My puts are still even on GME. Is some CNS positioning, Donro? LPTV. Me just coming down with the market, looks like. What day do we have tomorrow? These are 5-minute candles. I usually watch 5-minute. Sometimes I'll flip to 1 minute, but I cycle between 5-minute, hour, daily, mostly. Sometimes I'll look at weekly or 4-hour, but during the day it's usually 5-minute. Sometimes 1 minute, but that's more with like SPY and like maybe entering and exiting little scalps or something. Okay. Next data set. Whoops. That's not this week. There we go. Initial jobless claims is tomorrow. Oh, I think that could move the market. I maybe should close my futures contract. Fed Manufacturing, Susan Collins, Brainerd. Maybe I'll hold it. That's actually a pretty big mover at this point, because I think this is one of the main data sets Powell's looking at this point for raising rates. I think it's initial jobless claim. If we're waiting for the options to get cheaper before another rally happens, we'll definitely have to wait till next week at the earliest.
Rates, credit card default rates. This has been kind of a topic for the industry as a whole, largely because credit card companies have benefited from some of the lowest default rates they've ever seen over the last year or two. But the general expectation, this is going to change. Credit card levels are hitting new all-time highs. We're seeing the impact of inflation, and it is starting to show up in terms of weaker credit results. And I think it's going to be a lot of attention paid. I'm certainly going to be interested in really kind of identifying how much pressure they're feeling on this side and how quickly are we returning back to more normal levels, and what's the prospects for potentially going to elevated levels next year or the year.
Yeah, I mean, I think there's a lot of shorting, a lot of tools are using to suppress GME's price. Can't just call it naked shorting because I think it's a lot more than that. So yeah, I think they're using the ETFs. I think they're using options. I think they're using swaps, stuff I don't even know about, probably using to suppress the price. So yeah, I do think it is more than whatever you read on Ortex or on Yahoo Finance or whatever. Believe in MOS. I mean, MOS isn't defined as anything. That could be something different to everybody, so not really an answer there. I'm indifferent to DRS. I don't really care. Like, I'm curious what happens when the reported number is the whole float for sure, but as far as that needing to happen, I don't think that needs to happen. If anything, I've thought DRS is fine. Like, and I see the drive to want to DRS to take it out of brokerage's hands, and I get that. But what they're trying to suppress on GME, as far as I can tell, is volatility. Because when it gets volatile, it gets out of their control. And to increase volatility, you have to increase volume in trading. And buying and holding does not do that. So buying and holding maybe got GME to this spot where it is now, where it's basically just held up a really high floor, but the chart still looks like a penny stock, instead of it have come crashing down further. But if everyone was trading it, I think we probably would have squeezed already, especially if they were using options as well with leverage. So yeah, that's kind of where like the DRS thing, it's like committing to buying and holding, which I guess they were buying and holding and not trading anyways. So DRS doesn't really matter to me at that point, I guess. Yeah, no, I like to answer questions. Good questions. With the more recent kind of price action though, it has given me more doubts about what is going on with the stock. The last 2 years, it's been pretty easy to always see evidence of some massive obligations that had to get taken care of quarterly, or every few months, or however often these cycles happened. And ever since really kind of the split, I mean, we kind of had a little pinch here, little cycle going here, but not really. And then we had this here, but kind of ever since the split, it's acted differently and behaved differently. And so I'm not sure if they've been able to just push it off to try and hide it more before we have a huge move and it's like a huge squeeze, or if the split added enough liquidity that they can suppress it better, or I was wrong and there isn't this huge crazy short position, and this was just something else going on that I don't understand. So yeah, the price action in the last 3 months has increased my doubts on what is behind door number 3 for GME. And that could change if we get another crazy move that looks very abnormal, and borrow fees, and all the signs that show that there's a huge short position go up. But to me, it's like price action is the most evident thing, just abnormal. And if we don't get that, then it's definitely have some questions. Breaking the support was kind of a big deal to me, breaking that 19. I guess I did kind of have it in my head like, oh, that won't be broken, and you know, too much buying pressure, but they melted right through 19, low volume, and just melted through. So yeah, I don't know. I listen to Stock Market Live, or usually live stream. He's good with news and current events. He has got a big following of people that keep up with current events. And then not a whole lot else. I guess I'll watch the Trading Fraternity or the recaps at times. I like Zip Trader. I've been watching that kid. You guys have maybe seen him. He's pretty new, but he just scalps options. SPY options actually. But he's just a kid, and he's pretty good at it. Gets pretty good returns. I don't really consume a whole lot for other than that, and those are mostly, yeah, I guess some of that's entertainment. Zip Trader is like somewhat entertainment, but he's got good info, and it's pretty simple. And then he does call out pretty good plays too. I mean, usually you're a little late to him by the time it hits his videos. If you join his club or whatever, you can get him earlier. But and then Trading Fraternity is like, he's really good with the macroeconomics and microeconomic stuff going on that I'm not as keen on. SPY's coming down here. See what happens with that support. Never to what happened with next to nothing DRS has been a good show. Super John. Very convincing. Yep. Volatility upwards and it gets halted. Yes. Thanks, Ryan. I appreciate it, man. What percentage and R exchange percentage during that low, though? You're probably smarter than me. The short percent and off exchange percentage during that low, it went up, right? Isn't that what we were noticing at the low? Suspicious in what way? That suspicious that there is a huge short position, as far as I could tell. I don't know. Is there something else? I've always asked people to bring me counter arguments to GME. And not fundamentally, of course, we can argue back and forth about that, but just counter arguments to that there isn't this huge short position. Like explain these things, explain these FTDs, explain the borrow fee, and yeah, all the counter arguments I've searched out for. So yeah, if there's something that's different now, I would love to hear about it. Trader Society. Yeah, I don't. Yeah, he wears like a hat. I'm not sure the name of his channel. But yeah, that was just entertaining, and I was like, yeah, I'm always curious about those guys that just scalp trade. I've never wanted to have to do that. But I've been not scalping, but I've been day trading a lot more, and my style is definitely different than what he's doing. But he's just using massive leverage. He's doing like 250 contracts, daily contracts on SPY, and just catching tiny little moves, in and out in a few seconds. But it's got good risk management and discipline. That's really all you need. Like, it's easier said than done. Yeah, I haven't spent much time on GME Meltdown. But yeah. Yeah, haven't heard any legitimate counter arguments. Usually the counter arguments end up just being like fundamental stuff. I'm like, okay, well, great. That's not. Yeah. SPY's coming down here back to the lows of the day. Appreciate it, Ryan. Thanks for watching, man. Got me watching GME. Oh, BBBY. Kind of moving down with it also. Projecting around that 9 moving average. I'm waiting.
COVID pandemic hit.
I'm waiting until the bell though, and even after the bell, we could get an after hours move today, I think.
Then as yields are down, notice the 10-year punching through 3.5%, all the way through 3.4. Massive bond rally today, getting through yield support.
Retail
and
collective
stocks are not able
All
to
right.
rally. Now, it's just a day. It's perhaps some degree of expected, given these are important levels where you will get some chop. But this type of bond rally, a year ago, 8 months ago, 18 months ago, generally at any time throughout the Fed-driven market of the COVID era, you would have expected stocks to be rallying big on a move like this in the 10-year. And instead, they're struggling. It's a very important difference, and arguably could be the biggest difference for traders this year compared to last year, where inflation shock is not the case as we saw in the data this morning, but there is still a data shock. It's just in the actual strength of the economy and the degree to which it's disappointing. Banks are down 1.5%. I think you need to keep watching this group. Last time Danny Kirsch was here, he told us about watching the regional banks and the financials as a risk point if the economy does slow down. He's back with us here this afternoon with a couple other trades on his mind. Looking forward to that conversation. And then lastly, just want to point out with VIX popping here at 20, you could take that narrative. I think I just laid out a pretty compelling narrative for maybe why fundamentally there's reasons for stocks to sell off based on recession risk. But you could just look at this chart of the VIX over the last 5 years and see that the trend line hasn't broken. Every drop in the VIX is higher than the last one on a weekly basis. And so if the line holds, we would be expecting stocks to sell off and the VIX to pop basically right now. And it is. Let's see how we fare into the closing bell. There's about 54 minutes left. The stocks are down near the lows. Let's get into some of the more specifics here about what's happening with Renita Young, my colleague, senior markets correspondent here at the TD Ameritrade Network. Renita, I think one of the most interesting stocks to start with here is PayPal. I was just listening to Nicole's show, and both her guests were talking about the risks in being in companies that are exposed
specials
to
on ATER.
consumers who are indebted, who have credit
I like
issues.
that.
PayPal is
Balance
now one
sheets
of
to
the main
examine
ways
equity
we
behavior.
pay online.
Sounds pretty
Retail
smart.
Sales are
I
stinking
like
up
to
the joint
listen to
this
smart
morning,
people.
and the stock's getting hit.
Well, when that happened this morning, retail
if you look at
sales
balance sheets of
dropping by
ATER, I'm
1.1%.
definitely interested.
It really did take a hit at
I don't know anything
most
about
of
this
the
company.
consumer stocks. And PayPal, as you note correctly, is highly exposed to the consumer, and it's seeing a flurry of analyst action today. We see SMBC Nikko downgrade
Is he bullish on ATER? Does he like the fundamentals on it?
price target from 90 to 85, but maintained a hold on it. And these analysts are listing risks like a lower quality mix of revenue in the fourth quarter, and one of those have to do with the fact that it's highly exposed to the consumer, that this stock does well when consumers spend money. And the fact that consumers are pulling back, obviously they will pull back on their payments where
bouncing
they
near
do
that
these
low.
things. And PayPal is expected to feel that even harder this year. Now, the analyst over at Jefferies expects the full year for 2023 revenue to be guided
I can't even remember what
below
this company does.
these street estimates, at least about 3% below street estimates. And
Probably
this
consumer.
is really the story of
electronic
the
e-commerce.
day.
Oh, yeah, that's
Not
right.
particularly PayPal,
you have
but since
website?
retail sales came out, the story of the consumer not being able to buy as much, and it's really the background story so far of the year.
I agree. In fact, we said yesterday in our conversation with Mike Green to reference that again from Simplify about the risk to slow down in the economy. He tweeted out a chart that basically shows periods where retail sales flatline. It's right now. It's 2000, dot-com bust. It's 2008. All these periods have something in common.
Oh, they're just like a big
recessionary.
Amazon seller?
At the same time, layoffs too. And so all this fits together, right? Where if there's one
That's
thing
what
that
it
can
looks like.
cause a drop in sentiment and sales, it's losing your job.
Absolutely, and we see that with Amazon. It's a big day for Amazon, not necessarily the greatest day, but its stock has been hovering between gains and losses today. So I'm guessing that investors, some of them like this news because Amazon is cutting costs and it's essentially making good on its promise to lay off more than 18,000 people, which is not a good thing for those people, obviously, but others feel like it's a bad thing because it shows weakness. And so that's why we see the stock kind of really muted right now. At where
Thanks
it's
for the
moving
dono,
now.
Ryan.
Today's the
Appreciate
day
it,
that
man.
Amazon's
Cheers,
reportedly
buddy.
beginning those
Guess
cuts
I
of
wanna
18,000
use to another
people,
one of your
and
videos.
it is apparently the
Appreciate it.
largest cut that the company has ever made for jobs. The positions are mostly
It's
going to be
confusing.
in HR and retail, and CEO Andy
Yeah, if you have
Jassy
Discord, jump on
announced
our-
these
jump on our
cuts
Discord.
earlier this month, so it's not a surprise. Certainly not a surprise for the sector.
Well, that being said, Ace,
which
I'm gonna
we've
give you
seen
the,
cuts in Salesforce. We've seen
roll-
cuts in other
what roll is it?
big tech companies, but it just shows the opposite.
Happy
exact
crew. I'm gonna
opposite
give you the
of
Happy
a few
Crew
years
roll.
ago, where we saw so much expansion
Ace in Discord.
software and services that
solid
involve
donator as
software.
well.
Now we're just seeing that contraction
That's
as companies are a lot
kind
more
of for, like,
selective with
members
how
or
they spend
whatever,
their
but
money.
Huge
You've
180.
donated more than
That
few months worth
is a
of
very
membership.
good point. That it's not a shock, and markets were trying to rally.
Thanks,
a lot
Ryan.
of these
Appreciate it,
companies
man.
when they announced these cuts. Similarly with
Unable to
Microsoft,
accept
that
invite.
actually
Oh,
opened
shoot,
up
is it?
higher today. Now it's down 1.5%.
The link.
10,000 jobs there. So I mean,
see.
it's like the list keeps getting longer.
It does.
It's not just
And-
like
The link
crypto
expired?
exchanges and stuff.
Right.
Where'd you
now,
click on it?
That's a good one. But so these 10,000, that amounts to about 5% of Microsoft's workforce,
pretty good.
and these are going to impact all of the teams globally. And reportedly, it's going to be sales, marketing, engineering that may
thanks,
get
Ryan.
the most hit.
Let
But when you
me
think about it,
update
aren't
the-
those some of the areas that are needed
One
the
of the
most
description.
at this company? So
That's
I
not
wonder
good.
how the company is going to restructure itself to be able to function, or maybe
I can
they
update it.
choose to diversify the business yet again, because we know Microsoft has been through several reorgs when it comes to what the business is doing. But the company is also taking a $1.2 billion charge this year
Oh,
that's
yeah, that
tied
could
to
be
lease
it.
consolidation, other things.
Yeah, 'cause I've had people
that
join
it's
from
essentially got to
stream.
pay off to be able
worries,
to
yeah.
cease action and activity with.
Oh, Spy's
But
moving back up a little bit
This is
here.
interesting because we have a company like Morgan Stanley that says that, oh, they're actually in the right spot. And the fact that they're taking these charge-offs prove that they're true to their margins and they're going to stick to their word. And we'll find out just how the outlook is. Morgan Stanley says that the outlook for Microsoft remains durable because of those things. So, we'll see what other
I'd like
people
to
think, what
cold
traders
shower,
think.
yeah.
A necessary
Yeah,
kind
I'd like
of
to add them to
move,
my long term,
is
you
the
know.
way a lot of these analysts have described these layoffs. But to your point,
Probably-
the market may be kind of arguing.
Probably looking at,
with some right here as the stock
thing is like,
bounces from this morning,
probably like to add
fail
dividends.
in the afternoon.
Dividends to the
Stock
long term,
eventually
and
go
then
down.
just stuff I
Combination
know
that's
and
happening here
use,
at
you know what I
the
mean?
company
Like,
level,
I'd like
we see
Chipotle,
big
I'd
macro
like
data.
Domino's. I might just
Find out
choose
how
Domino's
to
over that
compare
since they have a
should have
dividend.
options, Piper Sandler. So Danny, let's start
Probably
talking about the banks and
Amazon,
the financials we talked about last time. We saw
maybe
a little bit of a
Netflix,
mixed reaction on earnings. The market's not in a panic yet, but we are starting to
Probably
see
add. I have
for the
Tesla. I'd probably
first
add to
time
Tesla
some real
even.
evidence that bad data is
I don't know.
equating to
I've
bad
got a long
days
watch,
in the
watch
stock
list of
market. Is that gonna
stuff
come
I'd like a
from
deal
banks?
on. Thing is, they're not all going to
Yeah,
bottom
we
at the
looked
same
at
time,
regional
so that's
banks are
why
down a
it can
little
be
over 3%,
it can be tough.
so
Like
we're seeing that.
small caps will probably bottom first,
Regional
and
banks have
everything's
been
gonna be coming down. They're gonna start rallying.
Last time I was here, we talked
So
about buying downside there. We continue to
picking
like
those up.
downside. Look at the 3-month
And then,
yield curve. It's
yeah,
the
large
most
caps will probably be
impressive, I
last,
think, since the
but
early
still could be
80s.
different times on the
And
bottom.
The outlook for regional banks just seems very, very poor going forward. Net interest margins are actually shrinking. There's no demand for.
But I need to make sure I have enough money
rates at
for
these
some
levels.
real estate.
And
So
defaults, that's the big risk. Defaults start picking
We'll
up.
see.
You're already seeing like the bottom end consumer.
15 minutes into power
starting
hour,
to get a little bit stressed.
still
and
hanging out at the
working its
lows.
way up. And what regional banks don't have, that the big banks have, is these huge deposit bases. And so for our purposes,
Yeah, I did see
we
HKD
continue
popping
to
up today.
KRE downside and
Doing this normal
continue
weird
to
stuff.
work. We think
Now breaking
keep
view
working,
up.
especially if we're entering a session, which our firm thinks
Yeah.
towards the back half of the year. That's what we'll see.
There's
Glad to bring
definitely
up the
some
yield curve
there's some
just
HKD holders in the
completely
Discord.
vanishing in front of our eyes. It's,
I've held it at times.
amazing that,
On this
people,
rally, I
still want to interpret this
I
as a
grab it
positive
and cut losses.
and the implications of what it might mean for the Fed.
I
when
did lose some on
historically
this
It's
move.
always pointing to something negative. So the
But I made
regional bank
pretty well
trade,
on
something we're
this
still
move.
looking at. There's a
think it
few
was that
other
one?
things that you're eyeing in terms of broad market.
Could be setting up
options
again for
activity.
another something,
Walk
something.
me through what you see in the S&P 500. You're looking at risk reversals. In
Some
the
yeah,
index?
some of the guys on Discord have
So
big
this
positions,
is a very
high cost
unique
basis,
trade that
unfortunately.
sets up this year. It hasn't set up in years past because rates were so low. So because the interest rates are about like 4% now, the forward, so the S&P futures curve is upward sloping, meaning right now the S&P is right around 4,000, maybe 39.95. So the front month futures are right around there. But if you look a year out, they're roughly 100 points higher. So the forward's up because interest rates are high.
Yeah,
At the same
it could
time,
be some sort of
S&P skew is very flat, meaning calls are expensive to
fraud
price.
and used
So
for
these
collateral,
two things happening
or
at the same time set up
you know, it's a
collars.
Chinese stock.
So we did like our outlook
who
call
knows?
last week with a bunch of our clients,
There's
and one of the
something
things
going on
we
with
were
it for
saying
sure.
is like, hey, do you think the market's gonna be up 10%? Raise your hand. And then we asked, do you think the market's gonna be down 10%? Raise your hand for the next 12 months. Majority of investors seem to think we'll be down 10%. It's more likely we'll be down 10% than up 10%, at least who are in the audience for our presentation. At the same time, the options market is pricing in the opposite. So right now, and this is what this chart is showing, you can sell a 1 year 10% of the money call in S&P, so roughly the 4,400 call, and buy a 10% out of the money put, roughly the 3,600 put, because we're around 4,000, and you collect money to do this. So let's say you have a long portfolio, you collect around 1% to do this trade. Let's say you have a long portfolio, you're long Amazon, you're long
rejecting
Microsoft.
the move
You
up.
don't really, you're worried about downside this year. You're worried about a
BBBY,
crash,
I mean,
worried about recession, and you're willing to give up
whether it
that
moves up
upside
today
beyond 10%.
after
This
hours
is a
or
great
not,
overlay to a
the
long
chart still looks
position.
nice.
So
I don't know how
you're
they
hedging everything down,
defer
basically 9% from here, because you collect money
obligations.
put the trade on. And then
if they are,
you
it
don't
seems like they
participate
definitely
anything
have
above
something.
10% up.
But
That's what that's the price. But as you can see,
the chart wise though,
relative
it doesn't look
history,
like it's over still.
you usually have to pay for this type of
I would
structure,
think
but
just
now you get
consolidate
actual
probably
collective
end a
amounts
week.
of it.
Maybe
Wow.
test some new
So
lows.
you can collect
Just
the
looking at
premium.
TA, but
You've also got to have some margin in your account,
have
right?
that
Because
T
you're going to
plus
be
2
very
still in my head.
exposed on this trade.
That said, maybe not even new lows. I
That's
don't
if
know.
you do it against your long stock
It's really just
portfolio, and ideally
trading in a
somebody
range and the range
like
getting
the
tighter.
S&P,
So
or if you're long S&P futures, this is
breakout
a
at
great
some point,
overlay
I guess up
to
or
long
down, but
SPY or long S&P
momentum's
futures.
still
But yes,
up.
do not do this trade naked. If the market rips, that's a huge that's
HKD
not
15%.
this is if you're already long the market. This is a hedge.
Okay, well, in the days of zero data expiry options bonanzas, we got to specify these things. No point received. I like it. So another way to kind of look at this dynamic in a way that what's happened with volatility is just looking at the VIX curve. I mean, quite a bit cheaper to buy downside. I mean, VIX 20 right now is pretty low comparative to the last couple of years.
I mean, it's pretty insane.
4%.
So, like, think
GME
about
puts
this.
up
Last year,
4%.
coming into the year, the VIX curve was actually higher than where it is now. I mean, now we're up a little bit because of the sell-off, but as of yesterday, and the S&P realized, meaning it moved twice as much over the past year as it did in 2021. So 2022,
down.
we were moving around 1.5% a day. 2021, we were moving like 80 bips a day. But the cost to hedge, the level of the VIX, is roughly the same. So it's like, to me, I think the outlook, we're bearish. We think the outlook is negative. You saw horrible economic data all week. Today was another example. The market seems to understand that the way to get inflation down is to create unemployment, create weaker earnings, get rid of all the pricing power that companies have, and that means margin shrink, and that means a lower market. So for our purposes, like, yeah, the VIX has been a terrible hedge. We've talked about this. Owning VIX calls has not worked for a year, despite the fact we can sign up. But if you look at that chart you just put up, the VIX did spike in January, February of last year. It seems like the exact same setup where, there's this really, really positive seasonals to start the year. So the first 2 weeks of the year, if you look at the basket of the 25 worst performing S&P names, those names as of yesterday were up 13%.
It's the pressure on market makers.
Yep.
From
as you can
options
see,
expiring in the money,
EM up a
calls
ton, which
expiring in the
always
money.
tends to rally between December and January. FXI up a ton.
So
all the
if they didn't
junky
hedge
stuff
for
has
it,
rallied because they get oversold.
then they have 2 days basically from when they
there's
expire
this
for anybody
dream
to
that
exercise
you
those
said this
options to
earlier,
deliver the
rates are
shares.
lower, all is good, buy
So
stocks.
that's honestly why a lot of the
Maybe- and
rallies
this is
for
what we're seeing today.
GME
It's
started
like,
on
well,
like a
rates are lower
Tuesday.
because the outlook's actually getting a lot worse. Growth is going to get a lot worse.
As far as the 35
the recession,
days,
we think will happen down
that's
the
at
line. And
some
like,
other settlement
the way
period.
to bring down inflation, which the Fed
I
says
think you're
they
talking
want
about
to
calendar
do, is to crush
C35
earnings.
also.
And all of this should manifest.
I'm not sure
into-
what that,
We'd expect higher volatility.
I'm
And the
not sure
nice
which
thing
one
is,
you're
like, you've
talking
got the VXN, so the Nasdaq VIX. The nice thing is, like, you're not overpaying for vol now. You're not overpaying if you wanted to hedge with VIX.
But when you
or you wanted to buy
when you buy an
QQQ
option,
puts.
market maker's supposed
It's
to
not
hedge it
expensive, and you've got all
by
the
buying
earnings
shares
coming
or
up the
selling
next
shares.
2.5 weeks.
If you're
It's
buying a
basically
call
as cheap as
at
it's been for last year.
$3.50,
I know that's one of the pushback we always get from clients, like, oh, I don't.
buying a call at $3.50, you look at the delta. So the market maker would have to buy 71 shares to have this hedged, so they're delta neutral. Market maker will always stay delta neutral. They're supposed to. Then come Friday, if the price is here where we're at 390 and I say I want to exercise this, if they didn't hedge with 71 shares, so 0.71 is 71 shares basically. So when we get way out of the money, that's why they don't really have to hedge. This is 3 shares. You know, this is 100 shares. But yeah, if they didn't hedge, then they basically have 2 days from when you exercise it to deliver it, which would be Tuesday. That's my understanding at least.
GDXJ is the junior gold miners. Historically, when the Fed does pause, so if that happens this meeting, the next meeting, somewhere we're close to the end, gold tends to outperform, and you can
I appreciate the questions, man.
Gold did terrible during QE, perhaps during QT.
100 shares, yep.
Does do well and actually acts as a
100
safe
delta
haven.
is the same as 100
perhaps
shares. So
gold
if you
could be
have
a
100 shares
beneficiary
of
this sort of
or
crypto
1 share,
unwind we've seen for a
you
while.
have 100 delta.
So for our purposes, we think these things could have legs. And the other like bullish
contracts.
The gold trade, central banks have been buying gold bonds. That's happening.
You know,
and who has the biggest balance sheet of everyone? It's not, you know, it's
usually they don't have
these large
100
central
delta,
banks, especially foreign
like
central banks, are adding
0.9998.
exposure to gold. And so why not just buy with them?
And same with the puts. So if you went
reasonable.
long on puts,
we like GDX calls.
if you bought a put here,
like,
the delta is
GDX
negative
jail, that's a little bit
0.45. So the market maker actually short or sell puts.
Thanks for the details as always. Danny, we got our notepad and our pens, and
then
we're keeping track.
by
KRE
close,
trade also very much
or if you exercised, you'd be exercising and then have a short position. But if they didn't hedge it, they would have to sell puts onto the market T+2
Sure thing.
by that date.
Options at Piper Sandler.
So
long gold.
yeah, when puts are selling off and closing, that's why you get this bullish push, because all the hedging the market maker had to do for that short position that they had, they're having to buy shares to close the hedging, so they're delta neutral.
ETFs, strategies that might work for those looking for broad basket investing.
Yeah, man. Absolutely.
All right, markets right now still about the same level that
40 minutes to close. BBY coming down a little bit.
Down for the Nasdaq, more in the Dow.
GME a little bit weaker. Close my covered calls. If we don't get after hours moves, I'll probably try and scalp some covered calls on BBBY tomorrow. And actually, I have GME calls. I forgot covered calls. I was able to do that. Let's see, didn't I? Yeah, those are up 62%. So most of my shares I'm using for margin, but I had 200 left I could do covered calls on. That's these. And they're up 62%. It's a small play. But I might close them. We'll see. BBBY coming down here. Buy. Holding. And GME down a bit. I am going to do my video. What's your strike on your calls? What's a covered call? Does that mean you have the cash flow to exercise? No. Strike on those covered calls for GME are, let's see, 22.5. So right here. And anytime you're selling options, you have to have some sort of collateral. So if you're selling a put, you have to have cash as collateral. So it's a cash secured put. They're securing your put with cash. If you're selling a call, it's just called a covered call. And the collateral they're holding for that call that you're selling are your shares. So technically you could do both those naked or on margin, but that's, I guess, not typical or what I do. So yeah, they're holding 100 shares, 100 of my shares as collateral with the covered call. And I sold a call to someone or the market maker. So it is a bearish play. But it's a nice hedge, or a nice way to profit on downside or even flat. There's no exercising when you're selling options. That's only when you're buying options. So if I bought a put or bought a call, I could exercise it. And then the person that sold the put or sold the call would be called as getting assigned. So technically someone could exercise their call that they bought from me, and then it would take my shares. It would be a stupid play, but it has happened. When there was a wave of options chatter going on in Superstonk, and people learned about how market makers hedged and how options worked a little bit, you had all sorts of people exercising calls on GME like months early. It was crazy. I had multiple people in Discord, and then even myself, where they had exercised a call on me. It was like a week or two early. I don't know. I think it was out of the money even. But supposedly it puts pressure on the market maker and forces the buying pressure more so than just buying the shares, because there's so many ways they can manipulate just buying shares and not even route it to any lit exchanges. So I think there's potentially less manipulation that they can do if you're exercising options. But I'm not too sure on that. All right, I need to do my video. Thanks for the donor, Ryan Curran. Appreciate it. Thank you guys for your subs and your likes. Lost power in the middle of the day, but came back strong. Are there 140,000 puts at 20 for this Friday? Is there a logical reason for this? More of these are great questions. I won't know the answer to all of them, but yeah, I'm streaming every day. 140,000 25 call. So you can use options as a way for more margin. They also use options, I think, to hide or put pressure on the market maker when they're way out the money like that. There's a whole number of reasons, probably. I think those are some of them, but I don't know all the reasons why there's tons of options way out of the money. For sure. Yeah, I need to get off, do my video. Thanks, guys. Appreciate it. Thank you for watching and all the contribution. And short recap today.
You know, to be down 17%.
But BBY looks good. Watch the video. It'll be out in like 45 minutes.
Excited about that. And then
sub up,
ultimately, on
like
the
up,
other side,
comment
it's going
down.
to be your
Happy
high-quality
money
businesses, your
sticks
high-margin businesses
around.